Rick Schmidt, why do I want to trade my 401k? I thought that was supposed to be my safe money.
Well, 401k is your safe money, but there's a way that you can get more out of that safe money. For the past 13 years or so, the S&P 500 has been dancing around the same level that it started out at. And I'm saying if you take advantages of the ups and downs in the market, you can create some lasting gains using this method.
All right, so tell me about the method. What's the strategy?
Well, 401k day trading comes down to buying low and selling high every day within a 401k plan. And so basically 401k plan fund options are mutual fund options or similar type options that are valued once a day at the market close. So I'm suggesting when the market's about to close higher, sell some stock. When the market's about to close lower, buy some stock. And in that way, you can take advantage of the volatility and create some gains.
Won't that be costly with all the charges involved?
Well, the beauty of a 401k plan and other retirement savings accounts is that number one, any gains you create are not subject to ordinary income taxes immediately, and you get taxed at the end of the day, but also you don't pay for your trading costs. So you make a fund exchange that's free to you.
What kind of returns are you expecting with this strategy? Because it does sound fairly intricate.
Well, in the last 12 and a half years since the turn of the millennium, you could have done 23% better than the market. The market got about 7%. If you look at the S&P 500, it was 7% lower now than it was in the 1/1/2000. But in 401k day trading, you could have earned a return of 16%.
And how much time does this take? Because not everyone can wait for the close of the market, do some trading, and be back there at 9:30 for the open.
Right. It really takes a few minutes a day. All you're doing is at the end of each day, you're looking at whether the S&P 500 index is higher or lower than when it started the day. If it's higher, you're selling a little bit of stock. If it's lower, you're buying a little stock.
And the downside is, because there's always a downside.
Sure. The downside is that if you have a market that keeps going up, 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 you don't participate as much in the gains. If you have a market that's going down, 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 you're participating a little bit more than you want to in those losses.
This market is
stock picker's market.
Stocks have rallied this year.
We're coming into a Monday where we're going to